Welcome everyone to Vested Interest. This is Shane. And before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who have subscribed to the channel. I really do appreciate it. On this channel, if you're new here, well, it's not rocket science. In my opinion, the best way to do anything, keep it as simple as possible. So it really boils down to consistently investing, buying dividend growth stocks and growing companies with positive cash flow that covers the dividends, companies with a high return on their invested capital, while I utilize both a dollar cost average approach, consistently investing into the positions within the portfolio on a minimum of a bi-weekly basis. But to be honest, I really do purchases every week, and part of the channel is covering those updates. On Sunday, I do a portfolio update every Sunday, full transparently showing you exactly what I've bought or sold for the week, any dividends that are paid out. I've recently gotten into options, so any option plays that I'm doing, I'll show you those as well. So if you haven't joined the channel, hit that subscribe button. Help me get to 1,000 subscribers. I think we just rolled over 500. So again, really appreciate everyone out there who has taken the time to subscribe to the channel. This is just a hobby of mine for now. Would love to get enough subscribers to be able to do this full time. So again, hit that subscribe button. Help me get to 1,000 subscribers. Really would appreciate it. Well, this video today is about 3 stocks that I'm looking to pick up in April. And we are going to take a look at Owens Corning, Johnson & Johnson, and Kroger. And let's jump right in the video. First up, Johnson & Johnson, ticker JNJ. So all these numbers here will be at the close of business on March 28th. I am recording this a little sooner than I typically would. This would be right at the end of the month, but I'm going on vacation, so I wanted to get this out and show you these are the companies that I'm going to be focusing on or looking to buy in April. So this should come out probably on the 29th, or I might put it out on Friday, but we'll see when I'm videotaping it on the 28th. But anyways, Johnson & Johnson, so at the close of business on the 28th, it was $151.82, down on the day. Really, it's been down a little bit over the last couple months. 52-week range as low as $150.11, as high as $186.69. So you can see it's right up against that 52-week low there. Market cap of $473 billion. A beta of 0.53, so less volatile than the overall market. So looking at a little less volatility here, so that's nice to see. PE ratio is a little on the high side, 22.56, but this is one of the best companies in the world, and it doesn't very often trade at a discount. So getting it close to the 52-week low for me is fine. I don't mind paying for great companies. Earnings per share, $6.73. Earnings date, next one is coming up April 18th. Dividend yield, the 2.95 currently, and a forward dividend of $4.52 paid out on the year. Divide by 4, that'll tell you what it is. And according to Yahoo Finance, where I pulled this information, they have a 1-year target estimate of $180.90, to speaks to some potential upside appreciation. So I am long Johnson & Johnson. I do have 70.432 shares. Looking to add, and I am down a little bit here, so looking to bring my cost basis down. My cost basis is $164, so I like it under that, well under that, $13 cheaper per share. A couple other things I like to note that I'm looking at here. So looking at the dividend yield theory, currently 5-year average dividend is 2.61. Current dividend 2.95, forward dividend 2.95. So it does speak to some potential undervaluation here with the current dividend yield higher than the 5-year average. Payout ratio pretty low, 66.12%. My preferred is 75% or under, and very nice return on invested capital, 29.70, return on equity at 23.7%. So very nice numbers here for Johnson & Johnson. That's the first one on the list. Next up, we're going to take a look at Kroger. This is not one in my portfolio, but I would love to add this. Actually, I have a call on Kraft Heinz Company currently, and if that was to get called away, this would probably be where I would look to deploy those funds from that sale. So Kroger at the close of business on March 28th was $48.92, up on the day a little bit. 52-week range as low as $41.82, as high as $62.78. So kind of not quite in the middle, but a little closer to the 52-week low, but not right up against it like we saw with the Johnson & Johnson at $48.92. Average value 5.39. Well, I guess that's not important because you're going to see this after, but market cap of $35.018 billion. A beta, another one with a decent beta, 0.47, half as volatile as the overall market. So another one to bring the volatility down in the overall portfolio. PE ratio much nicer here, looking at 15.99 on the price to earnings ratio. Earnings per share, EPS, is sitting at $3.06. Next earnings date coming up sometime between June 14th to June 19th. For a dividend of $1.04. So not a real high dividend on this one, but it is a faster growing dividend over time than Johnson & Johnson was. 2.14% is pretty nice though. And 1 year target estimate, at least according to Yahoo Finance, where I pulled this information, not affiliated, just where I like to pull information from, $52 per share. A couple other things I wanted to look at here. The 5-year dividend yield, 1.97. It's currently sitting above that at 2.14. So it is potentially undervalued. Another one that's potentially undervalued based on dividend yield theory. Very low payout ratio here, 30.72%. Really like that. Lot of room to increase this dividend. So even though it's only at 2% now, they have a lot of room to increase that over time. And like I said, it is growing by double digits. Another thing that I really like about this particular company, these companies in general typically have a low return on invested capital, but even so at 7.40, they have a very nice return on invested capital for the type of business it is, and return on equity is at 24.50, so above the 10% that I like there. So another one that looks fair, if not fairly valued, undervalued right now. Obviously, I'd love to get it back here in this $41 range, but at 40, it's still under 50, and I think it'd be a good value where it's at now. And last on the list is Owens Corning's ticker OC, looking to close a business on March 28th, $91.42. 52-week range as low as $72.97, as high as $91.42. So this one is actually closer to the high end of the 52-week range, and I still think it's undervalued. Again, if it drops back into the 70 range, I'm going to buy more. So this is one I'm looking to add a significant portion of. Another one I am long in, but I only have 44 shares. So I try to get all my positions to 100 shares, and then I back off and selectively choose where I'm going to buy. But when I'm building that initial one out, I'm obviously trying to get it at the cheapest price possible, and it is currently below my cost basis just by, just under 0.11%. So just below my cost basis there, right? I'm down $1.91. I'd love it to keep on pulling back below that, but anytime I can get it below my cost basis, I'm going to jump on it. This is one I want to build out as well. Some other things I like about it: 8.299 billion, beta of 1.42. So this one is more volatile than the overall market. One of the higher volatilities we saw of the three, price to earn, but has the lowest PE ratio, price to earnings ratio, $7.20 here, 7.2. Earnings per share, EPS, sitting at $12.70. Earnings date, April 25th through May 1st, somewhere in that range. For dividend, $2.08 paid out in the year, divide by 4. They are a quarterly payer. Dividend yield of 2.28%, so a little bit higher than what we saw with Kroger, but again, another one that is really growing by double digits. This one has increased the last couple, a little bit, like 20%. Ex-dividend date was March 2nd, and 1 year target estimate, at least according to Yahoo Finance, was $111.86. So it speaks to some upside appreciation. As we said, I do have 44 shares. Another one I'd like to build out to 100 shares here, so trying to get there. 5-year dividend yield theory, looking at that again, 1.44 is their average over the last 5 years, currently sitting at 2.28, so definitely speaks to some potential undervaluation on this one. Return on invested capital, ORIC, very high, 21.4%. I like anything over 10. That's very nice to see. Return on equity, 27.40. Another one. Very nice numbers all around. Payout ratio, extremely low, 12.36%. Long way to increase it. So those are the three that I'm looking to buy for the month of April: Owens Corning, Kroger, and Johnson & Johnson. Let me know what you think down in the comment section down below. If you like content like that, hit that thumbs up. Share with anyone we think might find value. Drop a comment. Let me know these three stocks. What stocks are you looking to buy in the month of April, or have been buying recently? What are you adding to your portfolio? How is your portfolio doing? Let me know all that down below. If there are some stocks you would like me to cover in the stock pick of the day series that I do Monday through Thursday, except for right now I'm on vacation. Hopefully you guys are all doing all right without me. I'll be back on the 6th, April 6th, right? But those are the three I'm looking at. And that is it for this one. Another one, we are going to the Bahamas, so I won't be seeing snow like this picture here. I need to get, we're having some work done in the backyard. So once I get that all done, I'll take some more pictures of the backyard once we get it all cleaned up and get the landscaping done there. All right. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Hit that subscribe button. Help me get to 1,000 subscribers. Really do appreciate all you out there who have already done that. Drop a comment down below. Let me know what you think of the video. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. Go ahead and drop them all down below. Constructive criticism is welcome as well. I'll take it with a huge grain of salt. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. We'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Invest involves risk and can lose money. You should never invest any amount you're not comfortable losing. Always do your own research and invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.